What's up, everyone? Welcome back to the Crypto Mavericks podcast. And we have a great guest here for you today. It's the head of growth at Maple Finance, Martin. Really excited to talk to him all about what Maple's been up to. They're an institutional focused on-chain asset manager. Martin, how you doing today?
Yeah, doing great. Thank you, Brian. Thank you for inviting me on. Really exciting to be here.
Yeah, Maple's had some buzz, not just within our company, across the entire, crypto and Web3 space. But before we dive deep, learning all things about Maple, would love to know a little bit about your background.
Yes, yeah. So I started in crypto in 2015. Figured out about Bitcoin. Was extremely intrigued by it. Saw the value proposition of store of value, digital gold. And then 2017, rode the whole ICO boom with Ethereum taking off and some of the other things. And just have stayed in the industry ever since. Joined Maple in 2022, and now heading up growth and mainly overseeing capital supply. So all of our partnerships, sales, marketing, the community, the token holder community. So it's really exciting. As you point out, we have had tremendous growth over the past couple months, and we're really excited about what's coming next.
Yeah, so you've been in crypto for since 2015. So, better part of 10 years now. You've seen your fair share of bull and bear markets. How are you feeling about the industry right now?
Yes, I'm feeling better than ever. Like it's just incredible. Back in those days, I think everybody was dreaming about, being where we are right now in terms of adoption, large companies launching crypto initiatives, nation states adopting Bitcoin, presidents talking about it on a daily basis. It's just incredible to see where we have come from and the legitimacy that, we have secured as an industry. And I think ultimately, if you look to the range of outcomes, in terms of like blockchain adoption. I mean, I remember back then a lot of people were talking about like private blockchains, and it's just all going to be companies interconnected. Like the public blockchain is not going to take off. And I think if you just look to sort of like the range of outcomes, like most of it is just being really on the positive side of the spectrum. And we've really gotten to an amazing place. So yeah, I'm more excited than ever, and I think it's no more question of whether this industry is truly going to succeed or not. It's just a matter of how long is it going to take for everybody in the world to use blockchain technology, whether they know it or not.
Yeah, great stuff. And Joe and I have been through our fair share of bull and bear markets. And every cycle, I feel like we're always talking about, institutions getting into Bitcoin or Ethereum, or, companies and, just countries to buy Bitcoin, Ethereum, or get exposure to digital assets, not in just the overall foundation of just blockchain, makes so much sense. So it's great from my point of view to finally see this come to fruition. A lot of our hopes and dreams from last cycle are coming true this cycle. So it's been super exciting. I know Maple Finance has, you're tagged as institutional focused on-chain asset manager. Really, anybody new to the audience that might not know a lot about Maple, I would love for you to kind of give a breakdown for us.
Definitely. Yeah, so Maple, so we really started as a credit protocol, and we have evolved into an on-chain asset manager. And what that means is that, we just do traditional asset management, right? So we generate yield for our clients. We generate returns on their assets. So clients give us, stable coins or Bitcoins, and, we generate returns, and we have institutional processes and principles and procedures, implemented to make sure that, it is strong risk adjusted yield. In terms of where the unique edge comes in, and that's why we call it on chain, is that all of our products are on chain, right? So people use stable coins, they use Bitcoin, versus a wrapped Bitcoin, and deploy it in our products. And then the core benefit that unlocks is, what everybody calls tokenization, right? But essentially every, product that people invest into becomes a token, right? And that token can then be used in the crypto ecosystem. So to give a good example is we have Syrup USDC, which is a yield-bearing dollar asset. And basically in the back end, the asset management strategy underpinning it is institutional lending, right? So we take in stable coins, we lend them out to large institutions on an over-collateralized basis. So we take in, Bitcoin or ETH or SOL collateral, and, we issue loans against that. Now, obviously, that whole loan book generates yield, right? So currently it's between 7 and 10%. And that then is represented in the form of a token, and that token can be used across DeFi, right? So you can trade in and out of it. You can deposit it as collateral on a variety of money markets. You can take it to different chains, right? Like Solana. You can put it on Pendle, fix the yield. You can speculate on the yield. It's powering vaults all throughout the ecosystem. So all these cool, unlocks that come with on-chain asset management. Like if you have a traditional fund, completely impossible, right? It's just a static fund. You cannot do anything with it. Or even if you have an ETF, I mean, you can buy and sell it, but that's pretty much it, right? Like most users cannot really do anything else with it. So that's really exciting. We're actually launching a new use case today. So it's a bit of hellfire, but so we're launching it as collateral on perps trading, right? So instead of stable coins as perps trading, which obviously doesn't earn a yield, you actually have yield bearing dollar collateral, right? So it's basically paying for your funding rates. And all those unique use cases come with it being tokenized, right? So that's really the big benefit of on-chain asset management.
I have a question, Martin. Largely, our demographics is United States based. With the new regulation of Clarity, Genius Act, stable coins not being able to be yield bearing and having to hold, treasury assets like U.S. notes. How has that been? Is this a U.S. product that we can enjoy, or how do we get exposure? Because I'm salivating at the 6.9% USDC syrup, yields, but just curious how that bleeds over to the United States.
For sure. Yeah, for the United States, we have a unique set of products, and they are essentially the same yield. So it's between 7 and 10%. We call those, blue chip secured lending, high yield secured lending, and there's like a KYC process, that underpins it as well. To your point, with all the regulations changing, at some point, Syrup USDC might also open up to the US. And I think some DeFi protocols have already opened up to the US, right? Like they already allow their users to come in. So I would say, that's definitely, like watch that space. In terms of, the products that are available to the US, they have exactly the same yield, right? So the yield source, the strategy is the same. It's just that they are segregated from a product perspective to allow, folks in the US to enter.
There's been really a big explosion of institutional grade borrowing with Bitcoin and Solana and just yield bearing products. What's really driving that force? What's the acceleration all about?
Yes. Yeah. So I think it's really two things. So number one is Bitcoin adoption. So obviously a lot more people are holding Bitcoin and they sort of see Bitcoin as a 10-year, 20-year, 50-year asset, right? Like there's almost nobody buys it and says, okay, I'm going to sell it a month from now. Like that sort of defeats the purpose, right? Like it's a long-term store of value. And if you think about it, if you want to hold it for 10 or 20 years, then, you want to have some sort of yield on it, right? Ideally. Like otherwise it's just being Bitcoin and sort of sitting there idle. It's the same if you invest in real estate, you would rent it out, right? Like of course you benefit from the underlying property going up in value, but then you rent it out to earn an additional yield on it, right? And actually get like a yearly cash flow. So that's the same with Bitcoin, where people are like, hey, I want to hold it for the long term, but how can I actually generate a yield on it and actually get yearly cash flow from this asset and make it productive? So a lot of people want to earn yield on Bitcoin, right? So that's basically once you have it, you want to earn a yield on it. So we see that that's a very natural evolution of being a Bitcoin holder. And we benefit from that tailwind, right? And the main way people get yield on Bitcoin right now is posting the Bitcoin as collateral and borrowing stable coins against it, and then generating a higher return on the stable coins than the borrow rate of the Bitcoin, right? So you can imagine if you borrow against Bitcoin for 8%, you generate 12%, you have like the 4% spread, right? Obviously that's not, fully in Bitcoin terms because the LTV, but, essentially have like a 3% or so return. Then on the dollar side, so that's really driven by stablecoins, but exactly the same dynamic. So once you have a stablecoin in your wallet, you want to earn a yield on it, right? You don't want the stablecoin just sitting there. So you either want to buy stuff with it or you want to, do stuff with it, right? So, and if you just want to keep it for a little bit, then you would want to earn a yield on it. So that's just a massive tailwind. So we see that with the rise of stablecoin adoption, first of all, we see a rise of adoption of yield, but that adoption of yield is actually accelerating faster than the growth of stablecoins themselves. So the amount of stablecoins looking for a yield has gone up from, I think, about 20% to like 30% over the last year or so. So more and more people want to earn a yield on those stablecoins, and we expect that trend to continue. So it first benefits from stablecoin growth. Second of all, benefits from more and more stablecoin holders wanting to earn yield.
Are you seeing more and more hedge funds and corporations that want to actually hold the actual digital asset than using like a middleman? That must be the case, right?
Yes, yeah. So that's a big benefit, right? Is that they can actually custody it themselves, either really themselves, with some sort of self custody setup. So it could be like a safe or an MPC solution, or there's a variety of solutions down the market, or through a qualified custodian, right, where they actually and it's like insured and all those things. So that's definitely a big driver of it. And I would say, it's not only just that they, really control it themselves, but it's also the fact that it's instant settlement, right? Which really that is super helpful, especially for these hedge funds. Being able to have trades settle instantly is so much more capital efficient than if you need to wait, for a trade to settle, even though you already made your P&L.
I have never seen a Bitcoin yield as high as with Maple, but I do see a minimum deposit. So I'm a little bit outside of this institutional grade of 25 Bitcoin deposit. But tell us about that. I see it's a Bitcoin and core pool of sorts, of dual staking. Can you explain that a little bit to our listeners?
Yes. Yeah. So core is just fully zooming out. So that's indeed an institutional product, right? So we touched on the institutional side of the business, and then we have like the DeFi asset side of the business. So right now that's available for our institutional clients, including folks in the US, right? So right now the strategy underpinning that is indeed core dual staking. And core is essentially a Bitcoin layer 2. So a blockchain that allows, Bitcoin to become more programmable and have smart contracts and everything else. And the way it works is that you need to stake Bitcoin as well as staking core to the blockchain. And that way you get emissions. So the Bitcoin is staked in a qualified custody account. So it actually is not bridged, it's not lent out or anything like that. It's just time locked on the Bitcoin blockchain. So you don't take any risk in that sense. And then you need some core to dual stake, and we basically manage that for the client, right? So clients give us Bitcoin, we stake it, we source the core. We put the trade on, and then we hedge out the core emissions, right? So the core blockchain has like core token emissions, in the same way that every proof of stake blockchain has emissions, and then we will hedge out the price of those emissions to essentially lock in the yield for the clients, and that's how we've been able to generate between 4 and 6%, I believe, since February of this year.
Yeah, some outstanding yields here, and I see obviously stable coins, Bitcoin, Ethereum. What's the appetite for some of these other major digital assets out there? Just let's pick on one, say Solana.
Yeah, so I'd say there's a lot of appetite in terms of yield. The strength of Solana, though, is that they have a lot of LSTs already. So you have like Jito Sol and Marinate Sol, and there's like a whole range of liquid staking Sol tokens. So it's harder on the competitive side because there's like 8 to 10% yield already embedded in this. So we have had some Sol products that we did, sort of like a year ago, but we're not super focused on that now. Like we are really focused on stable coins and Bitcoin. That's where we see the big market opportunity, right? Because Bitcoin is such a massive asset. It doesn't have inherent yield. So people are really looking for yield on it. People are starved for yield. And stable coins is like an obvious one, right? Like that's just a massive market that is accelerating very fast, and people also want to earn yield on it. So over time, we might launch more ETH and Sol products, but at this stage, we're sort of focused on those two.
Martin, you're focused on growth, and there's been a lot of catalysts that, like 401ks in America being allowed to invest into crypto assets. What's upcoming that you see may push crypto overall? Because it seems like we pretty much got all the narratives already checked off the box, right? Is there more? Is there anything else?
Yes, yeah. I mean, there's a lot more. So to your point, first of all, it's all the existing pipes that are slowly starting to open. Just get them going really big, right? And just make sure as much capital as possible flows through it. I would say there's still, if you think about it, you got like the ETFs, Bitcoin, ETH. That's like a very easy wrapper. Everybody understands it. And, a lot of people can invest in it, but it's still quite retail driven. Those ETFs, I saw the stat on the other day of the BlackRock ETF. Like most of the BlackRock Bitcoin ETF buyers are actually net new BlackRock clients. So it's not as much their existing institutional holders. It's a lot more sort of like new retail participants stepping in, which is obviously great for them. obviously you saw the news of Harvard, right? Their endowment, investing in Bitcoin, like that was a really big one. More of those are going to follow. Then another very interesting one is those treasury companies. So I'm quite bullish on some of the names. I mean, obviously there's a lot of them launching that might be commoditized, but there's some names I think that truly have differentiated strategies. But that's all still really for Bitcoin and ETH, and then there's some for like Hype and some other tokens. What I think is going to happen next is you're going to see some of those treasury companies that are actually going to deploy stable coins in DeFi. And I think that's going to be a really, really big one. So if you think about it, a lot of those current vehicles are just set up for, getting capital into the largest tokens, but not as much getting capital into DeFi, right? So the Ethereum treasury companies are chasing the dynamic a little bit by staking in DeFi, but it's still a little bit unknown whether they're going to stake directly in DeFi protocols or whether they're going to stake with like institutional staking providers. That's TBD. I think that will be split between them. But I would say once there's going to be some vehicles and like we're starting to see some first signs of that actually raise capital in a public vehicle and that deploy straight into DeFi for stablecoin yield, I think that's going to be a massive opportunity, right? If you can get 7 to 10% yields that are that are very liquid, right? Because that's really the core benefit here is, yes, you have private credit funds where you can get similar yields, but you need to lock up your capital for 5 years, right? But if you have a public vehicle that you can get those yields on, that's super liquid, I think that's going to be, a massive advantage. So I would say, we're still in the next 2-3 years are going to see a lot of these traditional vehicles pop up to get money into the crypto space. Over time, a lot of it is going to be more on chain, right? So these are institutions directly using on-chain applications, but right now it's still there's a lot of still hurdles for them to actually do that. Especially if you think about Harvard, like they're not going to create wallets and but they might invest in a treasury company, right, or an ETF as they just did.
I can't get enough of these treasury companies. I feel like every day I wake up and there's like ETHZilla, Peter Thiel has 7.5% of this company, and more people buying ETH and Bitcoin. And you call out Harvard. It's a great example. They spent 117 million dollars on Bitcoin. Amazing stuff there. And then there's the whole story. What was it, just from a few years ago, where they had a paper that they released that was like Bitcoin was more likely to go to $100 than $100,000. So all the Bitcoiners definitely rejoiced whenever we saw that Harvard headline come across the news feed.
Exactly. And if you think about it, that it always takes one of these big ones to go first. And then, you sort of eliminate all the career risk for all the other ones, right? Because they can say, yeah, Harvard also did it, right? The Harvard endowment. So every other university treasurer is probably looking at this and going like, okay, like we should, probably follow them, right? And a lot of them probably already wanted to do it, but there were just certain pressures that they couldn't do it. So I think, there's still so much capital on the sidelines, not just in the US, but also in Europe, right? I mean, really all over the world. So yeah, it's just there's so many catalysts. It's hard to focus on the ones that move the needle the most, but yeah, it's exciting.
You made me more bullish than I don't know how I can be more bullish, but let's talk about some risk. And if you can see any risk in the macros, because it seems like there's not much headwind, right? It's like the tariff volatility, we've seen that from Liberation Day till now. Now it's just kind of playing out, right? Like what can be a real hiccup to what's happening? Because it seems like everything's on all cylinders running, everything's coming on chain from TradFi. What can be some things that derail us, or if it's nothing?
For sure. Yeah, I mean, obviously black swans to the side, right? There could always be some crazy black swan that nobody can predict. But I think if you look to the overall economy, sort of like interest rates, are predicted to come down a bit like the Fed chair.
Yep.
And then I would say the main thing is just that there is optimism again, right? In people's heads. There's optimism in everybody's mind, especially in the minds of investors. And I think the optimism is driven really by two things. Like one of them is AI, right? So there's like a massive investing cycle in AI, which is just incredible. I mean, if you think about, and if you ultimately think about what AI can do over a 10-year period, I think we're still heavily underestimating altogether what the contribution of AI is going to be. Like yesterday, I was listening to an interview with the founder of the robotics company. And he basically said, that, all these robots that they're producing, like they are already working in factories, like doing jobs. They are folding laundry. They are, working in like the big package delivery companies like UPS and DHL and things like that. And so they are already operating and they are working and they have neural nets, right? Like they don't program them to do certain actions. They literally just show them videos of humans doing certain actions, and then the robot learns it themselves, right? And right now, the only bottleneck they have is production, right? They just need to scale this up. And we all know, we have seen it with Tesla, right? Like scaling up that production is very difficult. But once you scale it up, it changes the world. And you've seen the Tesla market cap just take like 2-step function changes. It just went 10x twice, essentially. And it just heavily changed the world. And now, we're just moving to electric cars. So I think the same is going to happen with robots. And then that is ultimately just the impersonification of AI in the real world, right? So that's like the AI boom. Ultimately, that's all going to come together with the crypto world because, I think a lot of those agents are going to live on the blockchain and they're all going to do their financial transactions on the blockchain, right? Because those agents are going to want to work with smart contracts. Because if you think about it, like an agent doesn't want any counterparty risk, right? Like they just want to do peer-to-peer transactions. Like as humans, we trust institutions, things like that. But as an agent, like why would you do that, right? Like you way prefer to use smart contracts. On top of that, it's programmable, it's digital, right? It just makes so much sense. So I think those worlds are going to collide. And then, what are the currency they're going to use, right? Like what is the currency that agents are going to save in? It's probably going to be Bitcoin, right? So I think that, all those trends are all shaping up. And, I think us in the crypto industry have always seen this, but yes, you can see something, but it doesn't mean that like the whole world and like the large pools of capital and the most talented entrepreneurs also see it, right? Because you need all of that to actually make it happen. And that's where you're just all seeing to come together now, right? Like literally the United States president and like the whole government is pushing this, right? And they see the value of this. And that makes it accelerate everywhere else in the world as well. So yeah, I think that optimism is a very solid foundation for a lot more bullish momentum ahead.
You're making me want to fire up some buys right now, live on air. Everything that you said about the integration of AI and crypto, Joe and I talk about it all the time. It's just like it's built for it,
Yes.
This year in particular, it felt like the crypto world always wanted to flirt with the AI world, but like AI was kind of doing its own thing. But now it does feel like these AI specific builders and creators are now looking at crypto and how to integrate. And they go together like, peanut butter and jelly. Like they integrate so perfect. And I do see that as a positive catalyst for just the overall crypto market and the overall AI market. It'd be hard to deny anything else. All right, we got all these bullish trends. We got Clarity Act, Genius Acts. We got Harvard buying Bitcoin. We have countries talking about. We're talking about Bitcoin reserves. It's been a really fun time covering the market too, especially for Joe and I, like creating content because when we're in a bear market, it can get kind of ugly. You're like, oh man, but this administration's been really positive, and the price action's been starting to follow in a nice way. Let's have some fun with it. Where do you think, let's just say the price of Bitcoin's going to be by the end of the year?
Yeah. So right now it's at 120. So yeah, I would say probably like 150 or so.
Feels bearish.
It's realistic.
Not gonna lie, Martin. Feels bearish.
Yeah, it might sound bearish, but it's still like more than doubling, right? Since the start of the year or so.
Yeah.
It's yeah.
Do you
It might be higher too, but like I prefer to be, understating it than overstating it.
Yeah, exactly. You don't want to come out here and say a million and we're like, look at this guy. He wasn't even close. No. I like that call out. Do you feel like you've been through a lot of different cycles and we hear about the 4-year cycle and, people are really like mapping that out compared to our current cycle we're in. Do you believe that the current cycle we're in right now is going to mimic those past cycles, or do you think with all these outside factors, with like especially the institutional interests, the ETFs and institutional interests, do you think this could be a little bit different scenario than we've seen in the past?
Yeah, that's a great question. I think it's very hard to say. I mean, there's arguments on both sides. I would say we're definitely going to see again at some point a dot-com like bubble, right? Because people are just going to get so extremely excited about the future of crypto and the future of AI. And I think those things are actually going to, at that stage, it's all going to be merging together, and it's going to be one gigantic like deep tech bubble, right? Um, but I think the trough is going to be a lot shorter because the adoption of technology is just going so much faster than in the past, right? If you think about .com, the bubble, I mean, before Google and Amazon and Facebook really made a mark on the world, I mean, that took like 5 or 10 years, right? After the .com bubble ended. And only at that stage, like they truly transformed the world, and like there were like more than 1 billion users on like each of these platforms. So I think this is going to go a lot faster than that. However, I would say I think it's probably more likely that we're going to see this the same as what we've been seeing over the last 2 years, where it's going to be sort of like micro bubble pullback, micro bubble pullback. We have seen it obviously leading up to the last March, right? We had like a big extension, then we had sort of sideways or sideways movement. Then we had like a big extension with the November election, into December. Then we had sideways movements, sort of like until July. And now we're like in the midst of another big extension, right? So my personal preference would actually for the latter to persist, right? I think it's a lot more healthy for an industry to just have an extension, have a pullback, have an extension, have a pullback, without just like all the capital getting in it and actually having like blow ups and all these ugly things. I would say there's a lot less systemic risk in the system than there used to be in 2021. So, obviously looking back, it's very easy to point out the systemic risks, but I think a lot of those things have just been solved, right? Like there is no Luna this cycle, right? Like there's no some like Ponzi token that doesn't actually have anything behind it. Then there is no, all the exchanges have like clear proof of reserves, like they've all survived so many of these cycles. So I'd say the systemic risk is really taken out of the system, which is extremely good, right? So yeah, that is sort of, so my prediction is it won't be as violent as in the past, but at some point there might be some but I mean, if that is the case, like Bitcoin will be at like 3, 4, or 500K, right?
Last question for me here, and just curious about capital formation and just overall currency in general. As countries, like you mentioned, retail investors are getting a little bit more sophisticated, right? They understand a little bit more. How is that trending? As a lot of individuals can now hedge against their actual currency, right? We've seen El Salvador try to do this, but like things like the Argentine peso, like Japanese yen, we've seen them devalue, right? Like, but it's a lot easier now for people to utilize Maple to get you to stabilize the currency. I was just curious of your thoughts because you guys are a global company. You guys see a lot of capital flow in and out, and just a thought, just curious overall.
For sure. Yeah, I think the natural evolution of money is going to persist, and all the weak currencies are going to die, and the strong currencies are gonna live, right? So to your point, a lot of these currencies that you point out are just very weak currencies, right? Like they probably shouldn't exist in the medium to long term. And the question is like, how do you get to the other side of that, right? As a country, and like that is, I think, an unanswered question. So, I would say to your point, like Argentina, they're actually now growing their way out of it. They might peg themselves to the dollar at some point, and the dollar is still arguably the strongest, fiat currency. And over time, it's going to move more and more to Bitcoin, right? So I think Tom Lee's argument in terms of at some point the U.S. government is just going to buy a lot of Bitcoin, and they're probably just going to acquire one of these treasury companies to do it, right? So I think that is actually the most likely outcome in the future. Funnily, I actually made a YouTube video about it like in 2020 or whatever. It's like how are governments going to adopt this? And it's like, it's just game theory, right? Like at some point, one of them is going to say, I want this. I'm going to put this on the balance sheet. And then just because the fundamentals are better, at some point, everybody's going to do it. So you just need somebody to move first. And it's just a very sensitive topic because it's money, right? Which is, one of the core pillars that a state is built upon and maintains its control over its population is by, managing the money supply. So I think that's, but ultimately it will happen. Imagine if there would have been a country that said, hey, we're not going to adopt cars, right? We're just going to stay with horses and carriages. It's like, great idea, like this could keep your GDP low.
Great analogy.
Martin, you're a wealth of knowledge. It was awesome having you on the podcast and educating us more about Maple Finance. We'd love to give a shout out for you to give to the audience to learn more about you and especially Maple.
Yes, yeah. Thank you for having me. Really excited to be here. Great work you guys are doing on educating everybody. I love the bullish vibes. I'm like very much in sync. So yeah, go to maple.finance. You can see all of our products, including the products for US users, our institutional products, and then you can follow us on Twitter. @Maple Finance.
Awesome. Thanks again.
Great. Thanks, Jens.